Good morning, everybody, and happy Friday, and thank you for tuning in to our Friday market recap. As always, I'll start with a little bit of positivity. Yesterday, the total number of patients that have recovered from COVID-19, according to the COVID Tracking Project, is 195,036 patients. Yesterday, we did just under 319,000 tests with a positivity rate of about 9%. New case count remained pretty constant, with just around 25,000 new cases a day. Increased testing and constant, and even better, falling case count is how we know that things are showing clear signs of improvement. The April non-farm payroll number was released this morning, and we saw that in April, the United States lost 20.5 million jobs, with the unemployment rate rising to 14.7%. Both numbers are new post-World War II records. As many of us continue to grow frustrated with stay-at-home directives from our respective governors, we have to remember that each of these job losses is a human story. It's a human life that has been changed and impacted, and that's going to trickle down to people's families and children and community. I know that many of us are frustrated with stay-at-home directives, myself included. We are homeschooling our children at the moment, and yesterday I made them do laps around the house because I was just at my wit's end. But we have to keep in perspective that things could be worse. During the financial crash in 2008-2009, the largest one-month job loss was 800,000 jobs only. And the largest one-month job loss in history of the entire country was in September of 1945, where we lost 2 million jobs due to World War II demobilization. So I don't think anyone on the entire planet thought a headline that we would see in 2020 would be highest unemployment since the Great Depression. With that, like I've been saying, these historic economic numbers that are going to keep coming out require us to dive a little deeper to truly understand them. Out of 20.5 million jobs lost, half of those jobs were in the leisure, hospitality, and retail space, with 18.1 million of the 20.5 million being labeled as temporarily laid off or furloughed. It's hard to see a silver lining in such a brutal number, but the silver lining is that during other financial crises, the number of temporary layoffs was a good indication of how quickly and how robust a recovery could be. The number, 20.5 million unemployed, 14.7% unemployment rate, just horrible, right? Just brutal. But what we need to remember, and as the market seems to be doing a good job of, many of these job losses are not permanent. There may be a lot of comparisons that we're going to hear on TV, but this is not the Great Depression or even the financial crisis, both of which took years to develop. One question we do have to ask and continue to monitor the data is to what degree will the layoffs begin to climb the income ladder? The numbers show a clear indication that the people that are hurt the worst by these layoffs are hourly employees, right? And that's indicated by the fact that half of the job losses were in leisure, hospitality, and retail, traditionally hourly paid jobs. As layoffs begin to climb the ladder of higher wage jobs, even expanded unemployment insurance won't be able to fill that income and demand hole. And although we do see layoffs begin, creeping higher, the consensus is that it's not going to necessarily affect the highest income employees. Remember, markets are forward-looking tools. And at the moment, the markets are looking at the data that we're getting, digesting it, and looking forward. This is actually a very rational response from overall markets. But don't let it lull you into a false sense of security. The numbers are going to keep coming out, and although we might be through the worst, it doesn't mean that bad news can't cause more market volatility. We continue to monitor the portfolios closely, and we stand at the ready to make any changes if those changes are warranted and required. Let's continue to keep in mind the good things that are happening globally. Disney Shanghai is set to open up today, with some restrictions, but Disney Shanghai is opening today. I've been diligently waking up at 1 o'clock in the morning to watch baseball on ESPN because in Korea, the baseball season has started. Yes, there are no fans in the stands, but baseball has started. Toyota is restarting 2 of their factories in the UK. In Europe today. One is in Turkey and one is in the UK. So we are starting to see things begin to open up. We're seeing industries begin to come back online. It will be a slow recovery, but it is starting to happen. Have a wonderful Friday and weekend, everybody, and I will see you on Monday for our weekly market preview. Have a great weekend.